All right, everyone, welcome back. Gold has been all over the news lately.
Yeah, seems like you can't avoid it.
It really does. And then Goldman Sachs comes out with this prediction. $3,000 an ounce for gold by the end of 2025.
Bold call.
Definitely caught my attention. So that's exactly what we're going to dive into today.
Sounds good.
What's driving this prediction? Central banks are buying up gold like crazy.
Yeah, it's pretty wild.
The Fed might be cutting interest rates soon, too. And of course, there's the whole Trump factor.
Always got to consider that.
So much to unpack. Now, just to recap, gold actually hit a record high last month.
Over $2,790 an ounce, wasn't it?
Yep, $2,790. And it's settled down a bit since then, around $2,584 now.
Right around there.
But here's what I found interesting. That dip happened right after Trump's re-election,
I see where you're going with this.
which also, by the way, made the dollar stronger.
Makes you wonder.
So is that connection typical? Dollar goes up, gold goes down.
It is, yeah. Dollar and gold usually move in opposite directions. Dollar strong, gold tends to weaken.
Okay, so explain that. Why does that happen?
It's because people see gold as a safe haven. If the dollar seems shaky, they turn to gold. But if the dollar's doing well, not so much.
Makes sense. So that post-election dollar surge might explain why gold pulled back a bit.
Could be a factor for sure.
But Goldman Sachs still thinks it's going way up. And one of their big reasons. Central banks are buying gold like it's going out of style.
You're telling me it's unprecedented, the levels they're buying at.
Exactly. So what's the deal with that? What's making them so eager to load up on gold right now?
Well, it's not just one thing.
Right. Got to be a lot of factors at play.
Yeah. It's partly about diversifying, moving away from the US dollar,
I can see why that'd be appealing to some countries.
especially in emerging markets.
Yeah.
They're looking at the US debt situation, all that, thinking, maybe we need some assets that aren't tied to the US economy.
A little bit of hedging their bets, so to speak.
Exactly. But there's also the geopolitical angle. The world feels pretty unstable right now. Trade tensions, shifting alliances, you name it.
Definitely a lot of uncertainty out there.
And gold has always been a safe haven in times of uncertainty. It's like the ultimate insurance policy for countries.
I like that analogy.
Yeah.
It's like they're preparing for a storm and gold is their sturdy umbrella.
Exactly.
Okay, so that's central bank buying. Another thing Goldman Sachs mentions is the Fed possibly cutting interest rates.
Always a hot topic.
How does that impact gold, though? I'm always a little fuzzy on that connection.
Sure, it's all about opportunity cost. Think of it this way. If you can earn a good return on, say, bonds, investments that pay interest, holding gold doesn't seem so appealing.
Because gold doesn't generate any interest, right?
Right. But when interest rates drop, those returns on other investments shrink.
So gold starts to look a little better.
Exactly. Gold, with its potential to increase in value, suddenly looks much more attractive.
Gotcha. So a Fed rate cut could really boost the demand for gold.
Absolutely. It could be a major catalyst.
Interesting. Okay, now let's talk about the Trump factor.
Ah, yes. The wild card.
Some analysts are saying his policies might actually push gold prices higher. How does that work?
Well, it's hard to say for sure what the long-term impact of his policies will be, but one thing is clear. They've created a lot of uncertainty in the global economy.
I think everyone can agree on that.
His trade wars, his unpredictable pronouncements on Twitter
Yeah, that's always a source of,
makes investors nervous.
you said it.
And when investors get nervous, they look for safe havens. That's where gold comes in.
Right, so any move by Trump that shakes things up could send people scrambling for gold.
Pretty much.
That's a pretty powerful dynamic.
It is. And don't forget all the other stuff we talked about. Central banks buying up gold, potential Fed rate cut.
Right, it's all connected.
All these factors together, it's kind of a perfect storm that could push gold to those record highs Goldman Sachs is predicting.
Okay, so we've got central banks stocking up, a possible rate cut on the horizon, and the always unpredictable Trump factor.
That's a lot to keep track of.
It sounds like gold could be in for a wild ride over the next few years.
Buckle up.
Right. Let's say, hypothetically, Goldman Sachs is right, and gold does hit $3,000 an ounce. What kind of impact could that have, globally?
That's a great question. I mean, on a global scale, it could signal a lack of confidence in traditional currencies, financial systems in general.
Yeah, it'd be a pretty big statement.
It would. And on a personal level, well, that depends on your investment strategy, right? Gold is often seen as a hedge against inflation, economic uncertainty, that sort of thing.
Right. But as with any investment, there are risks.
Exactly. It's not a guaranteed win.
Absolutely. Well, this has been a fascinating look at the forces driving the gold market. Definitely gives us all a lot to think about.
I think so too.
And hey, maybe even a reason to check out what's hiding in that old jewelry box.
Maybe. But, as always, do your own research before making any investment decisions.
Couldn't agree more. We're just scratching the surface here, giving you a starting point.
Exactly. Jump off point.
For your own research, your own deep dive. And hey, who knows? Maybe we'll all be talking about gold at $4,000 an ounce someday.
Only time will tell.
That's right. Thanks for joining us today. Until next time.
See ya.